Ladies and gentlemen, welcome back to another Bitcoin update. Now, yesterday I made a video and I made very precise points. I made the point that Bitcoin has flipped slightly bullish, but I also made the point and I grounded the audience by saying that 28.6K was needed before any reasonably decided Bitcoin buys could be made. I made that very clear. 28.6K was the line in the sand for Bitcoin buys, and they've been proven correct today. I woke up, I checked the price, we've seen a rejection from 28.6K, proving the fact that it is a relevant resistance, proving the fact that we need to get above it in order to place good Bitcoin buys. And so we've seen that rejection. We're going to be looking into the rejection. We're going to be looking into the resistance zone. We're also going to be looking at the support zone. But overall, 28.6K is the line in the sand. We're going to be looking at traditional market charts. Perhaps they supported the rejection. And we're going to be looking at weekly chart on Bitcoin, Ethereum, and total currency market cap to give us an idea of where that support is and to give us an idea of how likely Bitcoin is to bounce upwards for another retest, because we have entered a medium-term upwards trend. We just have one more step to make, and that is 28.6K. Guys, very important video today. Let's get into it. Okay guys, the charts we'll be discussing today are the Bitcoin range-bound chart, giving context to the situation on Bitcoin very, very briefly. We'll then be diving into the real meaty stuff of this video, and that is the daily chart and its rejection from 28.6K and the importance of the lower levels. Looking into that even further on the 4-hourly chart before proceeding and looking into the weekly chart, but specifically the wedges on the RSI on the weekly chart for both Bitcoin, total cryptocurrency market cap, and Ethereum. So 3 different chart with the RSI wedges there. We'll also look into bull market support band. We're then going to be looking into traditional markets, S&P 500, DXY, and gold. And then we'll finally probably look into the monthly chart, looking into the monthly candle close, and just briefly analyzing where we actually are on the monthly. So quite a straightforward amount of topics today, but overall a very important video because the main topic being that rejection from 28.6K and being the fact that we need to get over that level is very straightforward and very concise. Guys, without further ado, we'll get into the video. Before we do so, let's check out the VIP group on Telegram. This is the VIP information and results Telegram group. As you can see on the screen right now, it shows you what you get with the group, which is multiple trading plans a week, access to pending plans, 24/7 group chat, occasional trading tips, and occasional market updates. We're then going to be looking at the results, right? You can scroll down and see a PDF with the results historically from a group, 4 out of every 5 trades reaching profit with a 79% win rate. And then finally, we have a new thing on the VIP group, which is a 14-day free trial. You can check out the free trial information in the description below by clicking on the information and results group. So go ahead and do that. Guys, let's get into the video. We'll start by giving macro context, and the way I like to give macro context in my videos is by looking at the weekly chart, range-bound construction chart on Bitcoin. Now, this is a chart I've made myself, obviously, and it basically identifies the 3 critical ranges we've seen on Bitcoin throughout the last year and a half. The red range down here is the bottoming out range. The yellow range over here between 18K and 24.5K is the bear market range, and the green range here is where we are at right now. We are kind of in a bit of a no man's land situation. We are between the bear market ranges and the bull market territory. Above 32K, above this green box, is where we saw the vast majority of the gains in the 2021 bull market, or at least the vast majority of the time we spent in the 2021 bull market around that region. And so getting above 32K would honestly get us back into territory we saw during the bull market, which would be very, very good. So the upside level is 32K and the downside level is 24.5K, because 24.5K is the bottom of the green range, and dropping below that would be an entrance back into the previous range, which would be very bad, because then you could say that this entire formation was a waste of time. We drop below it, we enter a downwards trend again. So ultimately, if I'm just giving you this a quick little analysis, and I'll move on in a second here to inform you that 32K is the level to the upside we need to be looking at on a macro scale, and 24.5K is the level to the downside we need to be looking at on a macro scale. Now, on daily chart, it's a little bit different. Yes, of course, 32K is still important, and the red box up here represents 32K. And yes, of course, 24.5K is still important, and the green box down here represents 24.5K. But we honestly can start zooming in and looking into more medium-term to short-term price action. What actually is occurring here on the Bitcoin daily chart? Well, as of right now, we have a little bit of an upwards trend forming. Now, we'll look into the rejection in a second, but quite frankly, we've seen some good price action from the low here on September 12th. And we knew this was going to occur because I've said over and over again in previous videos that if we are going to go down below 24.5K on Bitcoin, right, we should be dropping back into this green box for another retest. Another retest would be very, very bad, and I'll tell you why. Historically, when you form bottoms on Bitcoin in support, you generally see one deep liquidity candle and then upwards from there. That's exactly what we saw over here in September. One deep liquidity candle and then upwards from there, and that's also, we're zooming all the way back to 2021, exactly what we saw in 2021. One deep liquidity candle close and then upwards from there. So basically, we formed a bottoming out structure. We formed something we saw not only before in 2021, but also something we saw back here in June of 2023. One deep liquidity candle close and then upwards trend. And it's been going well so far. I mean, we've formed a local upwards trend. Yes, we haven't flipped the medium-term upwards trend. We are still in a medium-term downwards trend because we still haven't seen a higher high, technically speaking. Well, I suppose we have, right? It depends on what your perspective is. I suppose you could say that the medium-term downwards trend was like this, right, with these highs, and we've hence flipped it with this new higher high. So I suppose, yes, we are in a medium-term upwards trend and a short-term upwards trend now. My apologies for that, my mistake. We also have higher lows, so higher lows and higher highs is quite a nice little medium and short-term upwards trend. But ultimately, right now, even though we've formed that upwards trend, even though we've seen that bounce from support, ultimately right now, we are in a little bit of a troubling situation. It's not particularly bad. It's not bad yet. There's reasons for it not being bad yet. But what we actually have done, if we delete the entire chart here and we look at what the critically defining level in this price region between 24.5K and 32K is, it's 28K. All right, because look, it's 28K. That was tested for resistance after this drop down into support here. It's 28K that was held for support throughout the entire month and a half range here. It's 28K that's being tested for resistance now. 28K is the line in the sand. 28K is the critical dividing level within our range of 32 to 24.5. Right, it's like that middle level. It's the middle ground. It's no man's land. And we really need to be getting above 28K, 28.6K specifically, I should say. 28.6K in order to see a flip back into the upper part of this range, and we can start attacking 32K from there. I said this exactly in yesterday's video. What did I say in yesterday's video, guys? I said, in yesterday's video, this is exactly what I said. I said, let's bring up the weekly chart. I said, Bitcoin looks okay from the weekly perspective. We saw a weekly candle close above bull market support band. That is good news. But I also noted that Bitcoin didn't see a weekly candle close above the 200-week SMA, and it also failed to see a daily candle close above the 200-week SMA. So I said clearly in yesterday's video, it's one of the first things I said, that yeah, Bitcoin is in a better position than it was when it was before, but it's still actually not out of the woods yet. That's a term I used over and over again yesterday. Bitcoin is not out of the woods. So I said that in order to get buying positions in a good position on Bitcoin, in order to buy Bitcoin, the best place to buy Bitcoin, the most secure from a risk-reward perspective place to buy Bitcoin would be once we break 28.6K on a daily candle close. And that statement that I made yesterday has been confirmed in the fact that we've rejected from it briefly and the fact that it is resistance. So I'll say it again. We need to get above 28.6K before buying becomes a good idea on Bitcoin. That's my personal opinion. You guys can do whatever you want in the market, but that's personally my opinion. I think the 28.6K is required for Bitcoin buys to become viable. At this point, we are still in the lower part, the lower compartment of the range between 24.5 and 32. And we need to break into the upper range between 32 and 24.5 before buys become relevant. The fact that we've rejected from 28.6K precisely exactly as per looking, you can see on the 4-hourly chart here how important that level is. It shows that level is very important. So guys, I will say it one more time and I'll stop repeating myself. 28.6K is required for Bitcoin to be fully bullish. Right now, Bitcoin is slightly bullish. It's leaning bullish, but it's not quite there yet. That's exactly what I said yesterday, and I stick by what I said yesterday today. Now, the downside levels that are important, one of the downside levels that's very important is 27.3K. The reason that level is important is because the bull market support band, you can see, actually supports that level, right? The 20-week SMA supports that level, so dropping below that wouldn't be particularly good. But it is a weekly chart level, so it's not like it's the end of the world if we see a short-term drop. Ultimately, we really want to we really want to remain above 28.6 because that is where we saw one of our recent lows. And yeah, so long as we're above, something like 28.6, honestly, so long as we're above, 25.7 really, or let's say 26, because that's where we saw the actual recent low, we're still in an upwards trend on a macro scale, on a medium-term scale, so we're looking okay. I'll explain that once more because I stuttered. We are in a medium-term scale upwards trend. As you can see, we have higher lows, okay, and higher highs, all right? So long as we're above the recent higher low, we're in a decent position. So long as Bitcoin's above 26K, it's okay. From a short-term perspective, we don't want to be closing a weekly below bull market support band, so that's something to consider as well. But obviously, we're going to look into this kind of stuff as we approach the next weekly candle close. Ultimately, the critical level we're looking at from the upside is 28.6k. That's definitive. That's final. Downside is kind of speculative. It really depends on what you're looking at, really. This drop that we've seen, this rejection from 28.6, is not completely unexpected at all. I mean, yesterday we spoke about the possibility of it based on the fact that Bitcoin has a descending wedge on the weekly chart, and that descending wedge had just reached, on the RSI that is, that descending wedge has just reached the resistance, and we touched that resistance, we rejected downwards right now. It's not overly surprising we saw a rejection there. It is worth considering that is a bullish formation. It will break to the upside eventually, most likely, but it's just about, what we see first. Do we see a retest of support first, or do we see it break upwards now? It's one of those situations. But I will say total cryptocurrency market cap did break out of its wedge, and Ethereum broke out of its wedge. It's interesting to note, and this is why I'm bringing it up, that all three of these charts, Bitcoin, total cryptocurrency market cap, and Ethereum, have the same wedge, but total cryptocurrency market cap and Ethereum have front run the breakout. So that could be indicative of Bitcoin seeing a breakout soon. And more importantly, on the retest, or on the breakdown we're seeing here, the rejection we're seeing here, we've actually come down and we're seeing a resistance support flip from support on Ethereum and total cryptocurrency market cap, which could support the idea that Bitcoin is actually on hidden support right now, and that could support the idea that we bounce here from 27.3k roughly, which is where the bull market support band is, and we go upwards and we retest 28.6k from here. Hopefully that scenario plays out. It certainly is a scenario that I see as relatively likely right now, so that's a bit of a short-term analysis utilizing the weekly scale charts. And that actually is a great example of how traders use different time frames to kind of impact their own analytical point of views on different time frames. I just used the weekly chart on a Bitcoin, Ethereum, and total cryptocurrency market cap to support an argument I was making from a short-term perspective on Bitcoin. So that's an excellent piece of education for you guys if you haven't seen someone do that before. But before we get into the second part of the video, there's not much left to talk about. There is a few things. I want to check out the Bitget and BingX exchanges. Ladies and gentlemen, here's a little news flash for you. You trust exchanges with your money. They get hacked all the time. They lose funds all the time. So the exchange you're using, you're actually trusting with your money. You're also paying them fees for trades. You're paying up to thousands, tens of thousands of dollars per year in fees. So you want to have a bloody good exchange, right? And that's why I have two exchanges for you guys, two options depending on your location, depending on what you want from exchange. The first one is Bitget. That is a KYC exchange. You can sign up from anywhere in the world, excluding the United States, excluding Canada, and excluding Singapore. Very low fees, protection fund, the whole 9 yards. We've also got BingX. That's our second exchange, and that is an exchange you can sign up non-KYC from anywhere in the world, including every country, right? With a VPN from anywhere in the world. Again, very low fees, protection fund, everything you need in an exchange. Both of these exchanges are top 10 exchanges in trading volume. Sign up using my referral link below to get a 15% trading fee discount on both of the exchanges. Again, they'll both be in the description. Referral link is there. Get on a good exchange and become a proper trader. Don't use these trashy exchanges that you're risking your money and paying over in fees. Guys, let's get back into the video. So, second half of the video, or second I should say, not really quite half, but second part of the video is looking into traditional markets briefly. I just wanted to note, kind of, using these charts here, that it's interesting to see how well Bitcoin has held up in wake of these traditional market charts, because obviously, as you guys know, historically speaking, Bitcoin has been correlated to the S&P 500, it has been reverse correlated to the DXY, it has been correlated to gold, and S&P 500 has been seeing, pretty brutal price action over the last couple of months. Ever since actually July, it's been going downwards, and Bitcoin has held up pretty well, considering S&P 500 has been going downwards specifically in the last 2 weeks. Since September 14th. You look where Bitcoin was on September 14th, it was actually on the low here. Bitcoin has gone exclusively upwards since that price region, or that time region, and S&P 500 has gone exclusively downwards. The same can be said about DXY. DXY has gone exclusively upwards, and Bitcoin's gone exclusively upwards as well, which is a reverse correlation. It's not what's meant to happen. And gold as well. Gold is specifically an important example. Gold has tanked, the fastest it's ever tanked in probably, more than 2 years, probably more than that actually. Rapid decreases in gold prices right now, and Bitcoin has held its ground very, very well. So what does this represent? Well, it represents the fact that Bitcoin is becoming more and more resilient to the actions of traditional markets. Although I will say that there is still some degree of correlation, and the fact that S&P, DXY, and gold have been taking such a hammering from Bitcoin correlation perspective could be indicative of why Bitcoin saw some weakness here at 28.6k. Perhaps, it can only take so much of a beating, and perhaps the beating is really showing through now. Who knows? But I am overall, in a way, proud. I guess proud is the word. Impressed, I guess, is the word. I'm overall kind of impressed of how well Bitcoin's managed to hold up in this upwards trend. It's really proving that Bitcoin is gaining a degree of individuality. That's something we're going to make an individual video on. Over the next few days. I think it is worthy of its own topic to start debunking some of those macro arguments that people are making based on traditional markets. I think it's very clear that traditional markets are not as important as they used to be on Bitcoin. Perhaps at some point in the future they will become important again, but right now they certainly are not. Monthly chart is the last thing I wanted to discuss. Guys, you were asking me for a monthly perspective on Bitcoin. I gave it briefly yesterday. I'll give it briefly again today. The monthly chart, although was very important in the past, is not actually very important for Bitcoin right now. And the reason being is because in the past, the monthly chart has been quite a definitive indicator for Bitcoin. It's been quite crucial for Bitcoin from a very concise, definitive perspective. Specifically in relation to this blue line you see on the screen here, you see in the past, every time we lost this blue line, we entered a sharp downwards trend. Every time we got above it, we entered a sharp upwards trend. That was a flawless indicator. We never failed that indicator, except during COVID, but that doesn't really count because it's a black swan event. It was flawless. And as of right now, as of 2023, it actually has seen its first flaw. And so something that we thought to be a very, very strong, very, very definitive indicator has actually seen messiness. You can see we jumped up and down around this 21 EMA so much that it barely matters anymore. The EMA that actually does matter a lot to me now on the monthly chart is the 50-month EMA, and that's something we've held for support quite strongly here and resistance quite strongly for over a year now. And so if we hold that, I think the Bitcoin still has a chance, and that supports 24.5k as well, which is great to see. So monthly chart is nothing really unique going on, nothing really special. It's not as important as it was perhaps a few months ago when we thought it was important. Right now it's kind of lackluster, but that's okay because our attention's been shifted to more shorter term charts like daily chart and weekly chart, which is actually better for us as analysts because it means we don't have to wait as long for closes, and hence we don't have to wait as long to shift our opinions and shift the narrative. So guys, that's the video. Thank you for watching. I hope you enjoyed. And just recapping, 28.6k is very important. That's kind of the overall conclusion. We have to get above that in order to make any precise and well-supported Bitcoin buys. And we do know that there is support here at 27.3, which has a decent chance of holding up. But other than that, there are lower support levels as well. That's the conclusion for the video. Thank you for watching. Check out the Crypto Academy courses. Become a Trader 10-unit course has been released. It's been out for about a year and a half. In that time, we have accumulated about 138 students, about 140 now. I haven't updated the website yet. So quite a few students there in that period of time, and you can become one of them. You can check out the information about the course on the website, as well as the unit content and topics, and the email addresses here as well for contact information. So guys, thank you for watching the video. I hope you enjoyed, and I'll catch you in the next one. Cheers.